Doc here from North America. I was trying to load something and it didn't load so fast. Sorry about that, a couple minutes late. Let's get to it. Let's see what they're doing today. What is the dollar doing today? I mean, cracked me up. I saw the 30-year bond, fair auction yesterday on the 10-year with the tail and so forth. And I see the 30-year bond go into a sell, and I think, oh, okay, maybe it'll raise the rates a little bit here. And then this morning, it's flirting with the daily buy again. It's through the zero line. It's like, what? It does it. Let me just show you what I mean. It's like, but wait a minute, it just went into the sell yesterday. What are they doing with it now? It's like, it's a it's a constant a constant game with the central banks. Look at that this morning. There it is right there. So it goes into the sell yesterday. I'm thinking, oh, they slammed it down. Pretty cool. Okay. Maybe, the weekly is trying to curve. Whoop, where's it at? Right there, like that. You see the weekly's trying to curve. And then all of a sudden, boom, boom, Betty boom. So it is what it is. It does play that game over and over and over again. So let's take a look at the Swiss and see what the Swiss is up to. Let's go over to that. And right there on J4X. And let's put it up on the Chicago Quant. Let's see, there's one mouse. Where are you, mousey? Right there. You see it's trying to perk up a little bit today, but at the same time, trying to go into a sell. We got a red dot. The channel lines are hiding the red dot, but there's a big red dot there. You can see it, and it's up for the day. But what is the math doing? It's trying to roll over. Let's see how Chicago the J4X is. J4X doing the same thing. It's trying to roll over. That's that stochastic action of it. So, just as it is constantly the same drag on. It just goes on and on and on and on and on. But and the end result is, that's what it comes down to. It does, and it just and it doesn't stop, and it's, and I keep on hearing the talking heads on the financial channels. They try, they really do. They try to, they try to. At least the ones that I'm willing to listen to. In other words, what channels and information sources I'm willing to listen to. At least they try to communicate. Like, I never, over the last 13 years, I have not heard of so many people to keep on saying stuff like, it's time for QE to end. It's like, good for you. And then they throw things out there like, we have a booming economy. We've spent trillions. And we're like 28, 29 trillion in debt. It's like, stop printing it. And then sometimes they don't say about the inflation. Then sometimes they talk about the inflation. So it's a fascinating, just in general, fascinating combination of, I guess you could say it's almost like a consciousness. It's a consciousness of reality of the financial markets, and then the consciousness goes away, and then it comes back again. It's a constant rhythm over and over again. So let's see. Don't see any questions on the chat line, so I haven't missed any questions by anybody, so that's good. And it is Thursday. Remember, it's the day before Friday. Hooray, here. We always enjoy weekends. And so that's where we are. Let's jump over to the euro. Now, the euro, I think it closed on a daily buy last night. Yeah, I think that's how it played out. Where's fact check? Where'd fact check go? Let's open up the fact check also at the same time. We'll put euro up there. There's the fact check there, right there. Okay. I don't remember how that got closed. But we will open it up now, that's for sure. There's Jordan. Hello, Jordan. How you doing? Let's see. Right. There's the fact check. We'll see what it says there. I kind of thought they went into a buy. Let's take a look at it over on the Chicago side of it. It'll make it very clear. Right there. Yeah, it closed in a buy last night. Now they're punching it down again. We thought they might play with that rhythm and then come back, make it charge back down to the 108, 109, or work their way down to that 108, 109 area. Where did it stall out last time? I think it was, let's squeeze it down. There, yeah. It stalled out. It was above the 111.46 area. So it got down to just, I guess what it is, it pierced the, what is that? The low is 111.86, that's what it is. So it missed it by a lot, by 40 pips, and it started to bounce back up, and now it's playing with that. If we go into a sell here, we're still in that weekly sell. You can see for weeks upon weeks. Let's tighten that up a little bit more. There you go. Since the kind of like what the end of September is that? Yeah. So at the end of September, we went into that weekly sell in the euro, and it doesn't seem to want to stop. As much as it keeps on, like that one here was really cool. They danced all the way up to the edge. We saw that for a couple weeks trying to get up there. It got through the time manifold. It definitely kissed the zero line a little bit there, and then rolled right over again. And then what you got is that nice big drop from 116s down to, as we said, the 111.86. So we're waiting, we're trying, we're hoping. We'll see. I guess we have all kinds of hope, wishes, and dreams, don't we? The action itself. Oh, I see. The whole thing is giant right now. Let's fix that too. There we go. And there it is right there, line 14. 1 day in a buy, 10 weeks in a sell. Yeah, that's the action. There we go. Indeed, indeed. All right, now, let's see what else we got going on there. I guess that's about all we can say about I guess that's about it. All right, now what we will do is jump over to the cable, which you can see right above it, line 13. 5 weeks in a sell, but 14 days in a sell. Interesting. They're really trending down on that thing. It doesn't seem to be dropping that far, but I mean, price-wise, but it is playing that bottom end of the range. Look at it. It's adhering. It's been now for what, 3, 4, 5, 6, 7. This is the 8th day playing with that bottom end of the range, just bouncing, around it, bing, 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 between these two black lines there. So we'll see how well that holds up, and see what they come up with there. That is what it is. Can we say anything else about the cable? I don't think so. I don't think so. Does anybody see anything else about the cable that would be like to be, explored, researched? Nothing particular there. We'll jump over to the European. Oh, here we go. Question by Jordan. Can we look at the bond market again? How it affects the U.S. dollar? I've read a little bit about it. I think it has something to do with interest rates. Yes, that's how we used to do it. That's the old school way of things. Cable looks like it's ending a diagonal on the 1 hour chart. Okay, short-term move, eh? To answer your first side of it, and then we'll go to the 1 hour thing. For a long time, the fundamentals were, we used to use that word were. The fundamentals were a combination of interest rates, and they were defined by consumer prices and production prices and inflation and GDP and all the magical old-fashioned stuff that used to be had value. And then and now what we have is basically you know, I don't know how else you can say it. I'm laughing at the thought. Basically, um, what can I say? You know, it was all the fundamental, and Janos, the head of research at Dukascopy, you know, had a video on it, which at least it clarified the things we used to look at. And someday, once quantitative easing is gone, you know, they say that there's a third of a generation of traders, or half a generation of traders out there now that, that don't even understand the concept of trading with fundamentals. But yes, they were definitely an influence on decision making at one time. Now it's just how much the central bank wants to spend, and what the MOMO, we used to call it on the trading floor, the MOMO, the momentum is doing. You know, that type of thing. Now, you went over to, we still keep those short-term things there. Let's go down to that. We keep that for you. Since you show up in a webinar, we keep it. And there is the 1 hour, and you can see our math. You know, the white is below the zero line. This is the two stochastics, just like on Chicago, just like on J4X right here. Yeah, the two stochastics, and this is the hourly one. And we can take a look at it on the hourly too, on the cable, and let's put cable on there. We'll go look at it daily real quick, and then we can jump over to the cable and look at that hourly thing that you discussed. That's the daily, doing the same drive down like ours. You know, what's that? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, just like our daily saw, you know. The hinkies have been in line with the action. And then let's take a look at it on an hourly base. And there it is right there. There it is right there. And let's put there's the, you know, the two stochastics. And so it's been pushed into the sell for, I don't know, what's that, on the 6 hours now. It's been pressing down. And what did you say about a triangle, was it? Diagonal, right? Yeah, 1 hour. Yeah, so it could be, you know, it could be that. And we have it over here. You see our math has been in a daily sell since right there. It's been in a sell all the way through that. So what's that? 1, 2, 3, 4, 5, 6, 7. 7 hours. We're in a confirmed sell. Just like we were here in a confirmed buy for 3 hours. Like we were in a confirmed sell from there for one, is it there first or no? No, this one. 1, 2, 3, 4, 5, 6, 7 hours again. So 7, 3, and 7. And then this one here was a confirmed buy right there. 1, 2, 3, 4, 5 hours. So yeah, and we keep that up there, and this is what we have on the Chicago Quant right there. You know, we have that combination there, and I think the blue line is the RSI. Let me just double check. Yeah, the blue line is the RSI. So you're watching the RSI and a stochastic, and we're watching two different stochastics battle it out. So in this case here, you know, it didn't break underneath. Well, it did. I mean, you see the stochastic broke underneath the RSI back up in here and has never come back, which is an interesting thing. So I guess, you know, we were exploring the ideas that you were playing with. How's that? Does that help out any? I hope it does. All right. What else can we say about that? I guess that's about it, right? I'm waiting for to see if Jordan says something. I guess I should. Yeah, it does. Okay, cool. All right, now let's jump over to the was it the Turkish Lira? We'll do that on a daily basis. Can't imagine the rock and roll that goes on an hourly basis on that beast. It probably stands still for a point, like you're wondering if it's like stuck in cement, and then it probably just goes wild, you know, just wild. And there it is right there. Nope, that's the yen. Yep, we'll do it. Go back to that again. There you go. There it is. So there's the Turkish lira against the dollar. Let's put that up there. There. and it's flirting with it's a daily buy for 2 days now. This is the second day. It's pushing up, so they're not letting that go. It's staying where it's going to stay. And then let's check it out on the euro, which is, to me now, I'm tempted to remove on the spreadsheet the dollar Turkish lira and go to euro Turkish lira. I think that should be on there more. It just seems to be very clear that it's a much more active, accurate, directional opinion, I guess you could say. It has that look to it. Let's put it up there. It's going to jump out at us somewhere. Right. Where are you? Euro. There's Euro CAD. There's Euro Aussie. Euro Zloty. Where are you? Euro. There it is. Euro Turkish Lira, right below Euro GBP. You can see the thing is sitting there cool and quiet. That's what I was saying. The hourly could be really just one real sideways beast. You're like looking at it and going, "Is this thing? Am I getting a live feed?" How many times have you seen a product that you click on and it's really dead, right? And you're looking for the next transaction, and it's like it's not happening. You're shaking your head. And you start looking around to make sure that you're still getting, I still have the internet, and you're still getting data. It's like, is it a live feed still? Is it soup? Are we there yet? It's one of those type of things, It is one of those things. All right. From there, where do we go from there? Let's go over to the Canadian. That's the next thing we usually look at. Take a look at the Canadian, and then that's the travel we take. Let's go with it. Where's Mr. Mouse? Right there. There's Canadian. It's been moving down for a couple days. Put it up over here. Oh, Canada. There it is. And you can see it's doing a little bounce there with the white line on the Chicago side of things. Like that. And then what else can we say about that? You see a lot. That hinky is interesting, isn't it? See how it's like trapped between here? Sometimes those inner bars and outer bars have a lot of sway. They seem to point at new direction. You can see it doing the thing right there. And where's our lines at? Right here. Down at the bottom, trying to make a turn. So that should be pretty interesting to see how they play that out. What else can we say about any of that, really? I guess not much more than that. From the Canadian, we try to interpret the action we see in the metal and the energy sector. Since it seemed, for a long time, we used to watch the NASCAD. And, they were comparing two Commonwealth countries. One without the two resources of gold and oil, and another one with, and we used to watch that. That was a really popular one for a long while. But we've kind of moved, what have we done? We moved away from that to looking at the Canadian itself. Not looking, and then going and looking and seeing how it's correlating with the two products. So the first one we'll throw up there is, let's see what gold is doing. I did see gold this morning when I sent it out. It was acting fairly well. I think silver was acting even better. But so you see that? Okay, so that's red. And let's do that. Put the product right up there. And it's trying to turn up. You can see on the Chicago side of it, it's trying to turn up. But then again, look at that. We're playing with the weekly. When we sent it out this morning, it was not below the weekly line. So now we're we're flirting with the weekly on the sell side again. But you can see here on the J4X, it's trying to lift up a little bit, and you can see it's doing the same thing with the Chicago, but it's not through. Whereas on the J4X, it is through. You know, for the last 2 days, it's trying. It's trying. That's the best way to describe what J4X is trying to tell us. It's trying. Now let's take a look at oil. You know what? Let's look at silver. I want to look at silver. Oh, so they're pressing it down now. Yeah, see, we were pressing up, and I had a green line in there this morning, and now it has gone away. It has run away. It has run away. You see that right there, and it's below the line now. So this morning, like an hour and a half ago, it was doing something positive, and now it's stopped. It is not doing it anymore. And you can see here, it's having a battle. The silver is having a battle with the J4X too at the same time. It wants to do the right thing, like go up. Doc thinks it should be much higher. I always think it should be much higher, but it just doesn't seem to want to do that, which is really odd. How do you have this type of inflation? And obviously the bond tells us that. You know, the bond trades at 1.4 on average. You know, on a 10-year bond, it went down to 1.38 in yield, 1.38, but we have inflation at 6%. Even when we look at inflation at 4.2%, the bond should be at least at 4.2%. And then, that's a fundamental. That was the old classic fundamentals before quantitative easing, and then before the central banks took the planet over. It used to be traders and free markets, and now it's central banks that run it all now. So that's the crazy. And then when we look at the 10-year, the 10-year is yielding about 1.78. So it's still 2+ percentage points on the best. And worst, it's 4 points off schedule for where it should be on the fundamental universal side of real information, real data. I mean, remember, traders, central banks are real until they're not. Well, that's an interesting statement I just made. It's a subconsciously statement, but in the end result is that they will control the markets until they don't control the markets anymore. Now that means usually some type of major calamity. But also politicians, responsible politicians might get in power and stop them from spending future equity. In other words, there's an attitude out there that make people happy now, don't worry about the future. So in other words, your children and your grandchildren, don't worry about them. Be happy now. That's what they're saying basically. I don't think it's that dire, and I don't think you can take a look at it in that fashion, but it is let's say it's a flavor. You know, when you smell something in the distance, be it fire and smoke, or someone cooking something wonderful or something bad, you know, it's the flavor. You know, I guess what it's really trying to do in the end is they're trying to reorganize society. What these globalists want to do is they want to have a socialist system. So in other words, they really want to live in a world where there are no cell phones, but they love cell phones. They want to live in a world where there are no smart cars, but they love smart cars. They want to live in a world where people have to work really hard, but they don't want to work at all. See the dichotomy there? It's a very strange thing. They want all the good things that capitalism brings, but they don't want to live in capitalism. It's a strange dichotomy. But it is what it is, you know. What are we going to do? And you know, we just trade them every day in the end result. But that's why quantitative easing is doing what it is. In other words, they protected the whole world from a disaster, a financial disaster. We had a financial disaster in 2008. Institutions that we believed had been there for centuries upon centuries are gone now. They don't exist. And they are owned by the central banks, and they pretend to be independent, but they're not. Like Citibank in New York, or Lloyd's of London in London, or Bank of Scotland, or you know, you can go on and on. Barclays Bank, Merrill Lynch, Bear Stearns, It goes on and on and on. I can name dozens of companies that don't exist anymore. They're sub companies of other companies that didn't have financial problems. And so, that's why, Jordan is saying, I read we're interested. Can you imagine 14 years ago, if someone put that statement out there that Jordan put, they wouldn't start off with. Can I ask about, he said, can I ask about bond market? Would I look at it to do a fundamental analysis on the dollar? In other words, that question alone, 14 years ago, would have never been there, because he would have known that fundamentals move the markets. But when you have quantitative easing since 2008, and we're in almost in 2022, and that's 14 years later, there's a generation of people who trade that have been shown that those fundamentals don't exist anymore. And those fundamentals existed for thousands of years. That's the amazing part, is that they weren't just around for like 30 years. They were around for thousands of years. So in other words, the growth of a country, its strength and success, its failure through economic and political and military situations defined those concepts. They don't do that anymore. So in other words, inflation? So there's a generation out there now trading that sees inflation at 6% and doesn't know that that is a very influential event to currencies and to bonds and to stocks and equities and gold and silver. Those fundamentals are gone. They don't exist now. And that's why I get agitated to some extent that we see silver trading at $22. How can silver trade at $22 when we have 6% inflation? How can gold trade at $1,800 when we have 6% inflation? And when we had 2% inflation, gold was trading at $1,900. How is it $100 lower, not $300 higher? And if it went $300 higher, you're talking about all-time highs. So, the proof in the pudding, I guess you could say, is exactly that, what Jordan did. Jordan spoke the truth. Jordan asked a legitimate question that shouldn't exist, but it does exist because of QE. It's very easy for me to give you the simplest answer of all. After all of what I've said, Jordan's question exists because of QE. Whereas if there was no QE, that question wouldn't even exist. He would not even ask that question. I found the ticker for the 10-year. Yeah, we have a 10-year on it. Here, I'll show you the 10-year. Because it's on my spreadsheet. Let me go over to the spreadsheet. The fact check spreadsheet has the 10-year on it. That's line 11 or something like that? Yeah, right there. So it's 6 weeks in a buy, and went into a daily sell yesterday. See one right there. I'm having a problem with the fonts for months on that. And here, let me just show you the chart on it. There it is right there. Oh, I need to change the contract too. So you can see here, it's been in a weekly buy since right here. 1, 2, 3, 4, 5, 6 weeks, going on a 7th week. Went into the sell there yesterday, and it's doing the same crazy thing. It's trying to bounce up like the 10-year, but not as strong. And we need to, this is the December contract, we need to put the March in there now. So there's that. And the yield on it, we can find you the yield on it too. Let's find you that yield. We'll be there in a second. Just have to punch it in, and it'll tell me what the yield is. And the yield on the 10-year is right there. Okay, the yield is on the 10-year 1.487 at the moment, down a little bit, and the yield on the 30-year is 1.859 right now, down a little bit. And these things swing, and like nothing now. They call them. They used to refer to the traders in bonds as the bond vigilantes. Like a vigilante that doesn't follow the law. They used to refer to them as, and they still do, they call them bond vigilantes if they don't follow the Federal Reserve's attitude about it all. Bond vigilantes. The media, it cracks me up. I mean, in so many different ways it cracks me up. I mean, it's just like, it's a, like, shake your head. They're crazy. They're crazy. Indeed. All right, let's see, what else? What else would you like to see? Let's see. Let's see, where were we at? Oh yes, we were looking at Canadian. We went over to the metals complex. Now let's go over to the energy complex just real quick and take a peek at what they're doing with that. And there it is, right there. There's the oil. Let's see what it's doing on the Chicago side of things. You see it's holding up very well on the J4X. J4X. See right there. And it's down a little bit today. Nothing major. It's still in a weekly sell now since what is that? Back in the last week of September, first week of November. It's in a sell. Let's just tighten this up a little bit, like that. See it right there? It's been in a sell since up in here in the 80s, and now it's down into the went down into the 60s. And let's see, you know, it's bouncing up a little bit. You can see we're daily buy from here, and it's still holding up by the hair of its chinny chin there. And as you can see, where's Mousy? Come here, Mousy. And you can see right here, same situation. You know, it's just doing a little curve, but it's still in the buy. We have a hard time believing that they're going to sell it down too much, but you know, at this point in time, you know, when you have a government running all this stuff, you know, there is no stopping it. I mean, there isn't. They will just do what they want to do, and there is not much more that can be said about that. In other words, the old saying, "Don't fight the Fed," has never been truer than this, in this era in particular. So, and then I showed you the 10-year. That's all right. Let's see. Let's go from there. We go over to the South African rand. That correlation of events, the way things used to be, or in some ways, I thought that the South African rand was kind of giving us a good warning that the metals complex was not, even with inflation going up, was not going to be a you know, a mover and shaker. You can see it's moving down a little bit, but you know, with that inflation news, we watched it climb. We saw this thing climb like that, and it shouldn't have done that, because gold should be going up and the South African rand should be going down. But no, fundamentals don't need no stinking fundamentals. That's pretty much what it comes down to. Don't need no stinking fundamentals. All right, let's put the South African rand up on the Chicago side of this. And where are you? Where are you? You're right. There you are. Activate. Ooh, it's popping up. Yeah. See that? It's popping up. What are we doing in Chicago Quant? Yeah, popping up Chicago Quant too. I'm sorry, J4X. Same thing. Doing the same thing, popping up. Hasn't pierced it yet, but it's acting very, very strong. It looks like it wants to go up again, which means that the metals are not going to gain any value. Hence, this morning, when they looked like they were turning and I saw the silver and I thought, oh my God, silver could actually go into a daily buy today. No, they smacked it down again. Because why, traders? Because they want you to know that inflation means nothing. It means nothing. I'm doing my Biden imitation. So in other words, when he wants to get his point across, he starts to whisper. He says, quiet things. And then he starts to scream again. So yeah, it's like a Biden moment. Don't worry, inflation means nothing. Just spend more money. The politicians in power right now are criminal. They are criminal. This is going to end very quickly next year. The criminals are going to be pushed out of office. A lot of the criminals are going to be pushed out of office. And Mr. Biden will be impeached. Let's see, he'll go through the impeachment process without a doubt. They are criminal. All right, from there we go over to the ruble. See what they are doing to the ruble this morning. The song we're hearing in the United States, look at that. Went into a daily sell there yesterday. Do we have that on the J? Let's double check the fact check spreadsheet. Where's that at? Right there. And Rubalaya. Oh, what happened there? I saw it. Ruble still shows in a buy, but it's not. Look at that. It's in a sell. So let's fix that. Rubelinsky. Right there. It's in 1 day in a sell. That's the way it really is. We're going to give that a save. Let's just make sure I opened up the right one. No, that's 9. We need to open up 10. Where's 10? There it is right there. Oh, it says 9 in there. How does that say 9? Got to fix that too. Somehow or another it got closed. Let's make 9 in there. There we are. File. Save. There we are. That's 9. Alright. And so the ruble's trying to move down, and the song that's going on right now is like, don't worry, no invasion to Ukraine, and we'll arm the teeth out of the Ukrainians, and even the Congress is telling Biden, go away, stop being crazy, you know. And I tell you, I saw parts of the Zoom with Mr. Biden talking to Mr. Putin 2 days ago, and Mr. Putin looked like a kid in a candy store. He looked excited. He looked happy. And can you imagine having to listen to Biden for 2 hours? I mean, the guy makes no sense. He doesn't even know what day it is sometimes. It's very strange. It's the strangest thing. No matter what Mr. Biden says, if his team doesn't agree with it, they change it after the meeting. And they put out a press statement. Never seen a president treated like this. He's treated like a child. So, and there's no stopping it seems like. So, the only thing they can do is impeach the poor guy. I mean, it's crazy. So, once the Congress changes to law-abiding citizens again, they'll straighten that out. All right. Let's see, where did we leave off? Ruble. So let's check out the yen. And there is the yen. And there is the yen right there on J4X. You can see it's moving down today, trying to go back into the sell after a couple days in a buy. Let's see what the spreadsheet says on that. So it probably has, what, 1, 2, 3 days in a buy, right? So it should be 3 on there. I was surprised it was even closed, so I might have actually hit the wrong button somewhere along the line. I'll have to double check some of that. So, yeah, okay, so it's 3 days in a buy, so it is all right. Okay, good. And looks like it's pushing into the sell today, so the pressure is on there. And as you can see here, was that there it is there on the J4X. You know, it's curving. It's starting to give us the warning. We'll start to see a red within the next few hours here on the Hinkies. So, and that is what that is doing. Now, brown cow. The next thing we take a look at is the Mexican peso. Right there. That's the last of the currency pairs that we run through every day. And then what we do is we jump over to the rest of the metals and the energies and try to get a flavor of that. And then from there, if there's time, we'll go over to the stock indices. And or we'll be, obviously, the most paramount, the most important thing of all is answering questions here. So, or looking at products that anybody wants to look at. One or the other, answering a question or looking at a product. You don't even have to ask a question. Just throw out there on the chat line what product you'd like to look at, and we'll stop what we're doing and check it out. Because you never know where we're going to learn about the next possibly good trade. You don't know. There's so many products to trade. Someone might see something we don't see. Trust me, I'm not looking at everything in the universe. I'm looking at a narrow vision that I trade. And so you can see here on the Mexican peso, it's trying to bounce up a little bit. You can see the daily is not really caring that much. We're lots of red dots. but we're in the weekly buy, so this whole little sell-off is like, no, don't do that. It's been in a weekly buy from back here, in the daily buy from back in here, and then finally got into the weekly buy here. So it's been, there's the winner chicken dinner, and from here it's been telling us, just take your profits and wait, sit on the sideline and wait, because we're in a weekly buy right there. Wait, be happy, no worries, be happy. All right, so that's the name of it, and as you can see right here, same situation, lots of red and buried underneath in the sell. So the daily is telling you steer clear while it's in the weekly. All right, from there what we do is we move now back to the energy and metals complex. So let's do energies. We saw what crude oil looked like. We're still in daily buy. Let's take a look at the where's the next one? Let's look at gas. Right there, there's gas. Something Europe seems to be dealing with right now. As you can see right there, that's oil in January. And let's take a look at that. You know, let's take a look at oil just real quick in June. There it is right there, the back month. It's holding up even better. Right there. You see that? Holding up better. But it's also in a weekly sell just like the front month. So. Alright, now let's look at nat gas. Right, where are you, nat gas? Where'd you go? There you are. Nat gas was flirting with the daily buy today and is trying, that's for sure. I think it closed in a buy there yesterday. I think that's the buy. Let me see. Let's just double check the fact check spreadsheet. Oh yeah, we don't do dailies on that thing. That's right. And let's just double check the line right there. Yeah, so it's in a daily buy from yesterday. It's going on a second day, and it's still holding up, but it's giving us a volatility signal. But again, traders, you can see it's been in that weekly sell since the end of October. So ever since the explosion where natural gas went to $33 in Europe, and I think it's down into the 16s or something like that now. Let's see if we can find on Dukascopy what the local stuff looks like. That's the American stuff. There's Brent, there's copper, there's gas, there's light, there's SUI, there's, what is that? That is Germany something index. I think there's another gas on here somewhere. Let's see if it correlates to the to what we heard about it going to $33. There's Bitcoin, there's bonds, there's your 10, is that the T-bond? That's the T-bond, so that's a 30-year. That's what that is, right there. Yeah, so that's the bond. And then, let's see, I thought there was another gas on here. National, that maybe? Is that British gas? What is that? I think that's British gas, isn't it? I thought that was a gas, I'm not sure. Yeah, it's a natural gas, and that's British natural gas. You can see where that's at. It's up definitely higher than what American gas is. All right. Oh, what's Jordan say here? He says, price? No, it's not a silly question at all. Are you kidding me? I told you the opposite. Is the price of a bond the yield? Apologies if that's a silly question. No, it's the truth. You're bringing out the truth. I guess I didn't get that across. You're bringing out the truth. In other words, your question, can I ask what bond market would I look at to do a fundamental analysis on? That's the problem. There is no fundamental analysis anymore. That's the problem. You're asking the truth. And you wouldn't ask that question if they didn't make you, if the financial media in general, minus me and Fox Business, not Fox News, Fox Business, and Newsmax, and a few of the, partially the Wall Street Journal at times, and the Financial Times at times, wouldn't state this stuff. In other words, there's very few news sources confirming what we're saying because they steer clear of it. They don't talk about fundamentals anymore. So, no, you're asking a true, honest question that has a really ugly answer. That's the problem. The answer is foolish and ridiculous. You're not. You're no apologies. You're being correct. The problem is that the fundamentals don't function. Matter of fact, Janos pulled his video off the list. It's not even up there anymore because the fundamentals are so far from reality now that they don't match what the general media in the financial general media and the regular media talk about every day. See, that's what the problem is that you're actually asking a super duper intelligent question. The problem is that it doesn't fit with the modern media anymore. Until it does, of course. It will one day again. It has to go back to it. Those fundamentals lasted for thousands of years. And now they've removed them. Since Abraham, the talk of interest and payment and value was real. Now it's not. It's not. Since 2008, it's whatever the politician wants. That's what the problem is. It's not real anymore. So no, your question was legit. I agreed with your question. I thought it was a smart question. You know, it's a good question. It's just that it doesn't work right now. The central banks do what the politicians want. Politicians want to spend more money. They will hold interest rates down so that they can borrow more money to spend because they don't have the money to spend. It's not like they have a room full of gold that they can spend. They could spend all the money at Fort Knox right now in the United States and we'd be still in deep debt. So, you know, I mean, that's what the problem is. So no, don't apologize for anything. You are accurate though. You are accurate. All right, there's natural gas. From the natural gas, we drift over to, let's see, what else do we look at here in the energy sector? Oh, let's look at the heating oil. You know, like gas, oil for automobiles, the heating oil they use for furnaces. Let's see, where is it at? I don't think they have it on J4X. They have it on the Chicago. They have it on Chicago. The heating oil. Right there. And that's getting ready to expire anyway. But you can see there, you know, it's moving up with the regular, you know, crude. But it's been in a weekly sell too from the 250 area. It fell down to the, where did it fall down to? To a low of 202. So it dropped almost 50 cents, which is 25%, 20%, like a 20% move down. 25%? 25% move down over the 6-week period. No silly question. You're silly. And there are no silly questions when it comes to money and trading. There are none. Zero. No silly question. There is no such thing as a silly question. Every question has some validity. It may be a long answer or a short answer, but it is not silly. It's a healthy thing to do is ask questions. Because you're dealing with money. You don't want to lose it. You're trying to make it, not lose it. So there are no silly questions as far as Doc is concerned in finance. There are only long answers or short answers. All right, now let's see. We've done that. Oh, we want to go over to the metals more. We saw the silver. I'm so sad. Look at that. Silver's. I can get rid of that green line. Look at it. They're smacking the heck out of it. Poor thing. And been in a weekly sell now for a couple weeks since the 24-ish area, 25-ish area, 24-ish, something like that. That week right there. So what's the date there? That's the 17th, 18th, 19th, 22nd. So it's been in a sell since the 2470-ish area, something like that. It went right into it, right off the first day of the week. He started pushing it down hard. Dropped underneath the manifold within a day or two. It was even more. and we've gone down like another $1.50 since then. So you know, again, this is the politicians. They need to convince you, don't worry, be happy. All right. From there, we'll take a look at platinum. I wonder if that thing's broken the $900 area. And it's pushing into a sell. Now, platinum is hanging out, it seems to have stalled out the platinum. Right there. So that's the platinum, the gold. Let's see what copper's doing. Copper is very firm. We've talked about it. It's got itself like locked in a $4 to $4.50 range, basically, if not a little bit higher. And they're pressing on it this morning after a couple days in a buy. But we've been in a weekly sell since up in the 445-ish area. So now we've gone down to the 420 area in that weekly sell. And then it tried to get up to the 440s, and now it's rolling over again. You know, they need copper for all the electric devices that they want. Remember, the people who are in control in the United States right now love new technology, but hate the way we get it. So they want the new technology, but refuse to accept how we receive it. No, it's how it's invented. So that's the dilemma we're in. Having a look at the bond market, it looked like it's going down. So just thinking, would other countries look to invest in the dollar knowing that the yield is going down? No, not at all. No, they would. Well, see, they would buy. If the dollar's going down, they buy into the United States because it's cheap. You know, buy low, sell high. That's the reason why there. No. That's a good question. It's a good question. Like I said, there are no bad questions. There are only long answers or short answers. So the answer to it really is that they would look to buy into the U.S. because the prices are going lower, not because they're going lower and thinking, oh my God, is things going down like momentum? No, they look at it and they say, okay, it's cheaper today than it was 3 weeks ago, so let's buy it now because in 3 weeks it might be higher again. But they're not looking at interest rates. That's the only difference, is that they're not looking at the interest rates as a measuring stick. They're looking at it. They're looking at the price that it's cheap, because they know that the central banks are going to keep the interest rates low because the politicians in charge right now want to borrow money. And if the interest rates go flying up, they can't borrow that money as easily. So that's the catch-22, I guess you could say. So no, that's a legitimate question. So they're buying, yes, they're definitely buying. The dollar will probably find a way to turn back up again, and then it'll go back down again. When it goes back down again, they'll buy it because they know that it's going to be kept in range by the central banks and the Federal Reserve. So in other words, it's a range bound. I guess the best answer of all is the marketplace is a range bound trading. So we're trapped in ranges for years now, inside ranges. And so that's what they want is they want equities, stocks to go up in value. They want bonds to stay down in interest costs. So they're also high in value. So no, that's exactly, you're right. You've got it right. You got it. You got it figured out. It didn't take long for you to figure it out. You got it right. All right, where are we at now? Oh yes, so we just got done copper, we did silver, we did platinum. So we're done the energies. We'll take a look at the stock market real quick. Here's another example of it all. Here's the Tech 100. That's on Dukascopy. Let's put it up on Dukascopy too at the same time. Right there, Tech 100. And it's been in a weekly sell since this week here, this crazy week from the Thanksgiving. And now all I've been trying to do is lift it up. It fell down in the daily sell with it. Now they're driving it up for the last couple days. And today's a little weaker. You see our little green dot keeps on appearing and disappearing. And you can see we're still in the weekly sell there. And what it did is it came back up to where they started from. There's what they refer to as window dressing going on now. And same thing there with the S&P 500. You can see that's holding up in the daily buy. And it's been in a weekly sell for a couple weeks there. and they pressed it down, and then went into the buy here, and then it jumped up. And then we have the Dow Jones Industrial Average, same situation. You know, same thing. It's been in a weekly sell since back here. It fell down, and now they're trying to lift it back up again, and they're trying to do the window dressing, but still below the zero line there. Cheers. Got to do some more research on it. Be my guest, Jordan. I think you're doing really good research. You're welcome to ask any question about your research, and you are on the right path. I can guarantee you that. I can guarantee you that. All right. Anyhow, this is Doc from North America saying happy trails to you until we meet again. Happy trails to you, to all our trading friends. See you tomorrow, TGIF. Ta-ta for now.